If you own a home in Florida, Florida housing market crash, real estate trends 2026, if you're trying to buy one, or if you're trying to sell one, this video is going to change how you think about your next move, because the numbers that just came out are ugly. The US Census Bureau released new migration data, and it shows that domestic migration into Florida has collapsed 93% in 3 years. In 2022, over 310,000 Americans moved to Florida. In 2025, 22,000. Alabama is now attracting more domestic migrants than Florida, and that collapse is dragging home prices down hard. There are zip codes on the Gulf Coast right now: Cape Coral, Punta Gorda, Sarasota, where homes are down 20 to 30% from peak. One condo in St. Petersburg, valued over $1 million in 2022, is now listed at $249,000. But the price drops you're seeing today, that's not the end. That might be the beginning, because there are 3 forces converging right now that almost guarantee this gets worse. First, Florida's insurance crisis has crossed a line where it's not just expensive anymore. It's making entire buildings unsellable. And we'll show you exactly how that's happening. Second, America's 2 largest home builders just reported earnings. And what they revealed about Florida explains why brand new homes are being discounted $40,000 to $60,000 as we speak. And third, the biggest Wall Street landlords in the country are quietly dumping Florida homes at a pace we haven't seen before. And when that inventory hits the market on top of everything else, the math gets really bad for sellers. All of that is coming. But first, let me show you the foundation underneath all of this, because once you understand why people are leaving Florida, everything else clicks into place. The Census Bureau's latest data, released March 26th, shows it county by county. Miami-Dade lost nearly 30,000 people to domestic migration last year. Broward lost over 20,000. Orange County, that's Orlando, lost 15,600. Hillsborough, which is Tampa, lost almost 12,000. Palm Beach lost over 9,200. And Pinellas County lost nearly 12,000 total residents, the second most of any county in the entire United States, trailing only Los Angeles. Now, people will say, what about international migration? Doesn't that make up for it? It used to. International migration was masking these domestic outflows for a couple of years, but that lifeline is getting cut too. Florida's net international migration dropped from over 411,000 in 2024 to 178,000 in 2025. That's a 57% decline in 1 year, and the Census Bureau is projecting it could fall to just 321,000 nationally by mid-2026. If Florida captures its usual 14% share, that's roughly 45,000 people. That is nowhere near enough to sustain what's been built down here. And here's why this matters so much for the housing market. Florida's entire economic model runs on growth. Hundreds of thousands of people moving in every year. That's what sustains demand for all the homes, the apartments, the commercial space. When that migration collapses, everything downstream breaks. Home sales drop. Inventory piles up. Builders can't sell. Landlords can't fill units. Prices fall. And one more thing that nobody's talking about. 1 in 3 Florida construction workers is foreign-born. With immigration enforcement ramping up, the workforce that builds these homes is shrinking. At the same time, demand for them is disappearing. It's a double hit. So that's the foundation. Migration collapsed. Now, let me show you what that's doing to prices on the ground. Zillow has the average Florida home at $372,755, as of February 2026, down 4.6% year over year. And here's the context that makes that number alarming. The National Home Price Index is up 2.2%. The rest of the country is going up. Florida is going down. It's one of only a handful of states in negative territory. The Case-Shiller Index, the gold standard for tracking home prices, shows Tampa has posted over 14 consecutive months of annual price declines. That's the longest and steepest streak of any city in their entire 20 metro composite. Tampa is officially the worst-performing major housing market in America. But Tampa isn't even close to the worst in Florida. On the Gulf Coast, Punta Gorda is down almost 12% year over year. Cape Coral and Fort Myers are down over 9%. Sarasota and Bradenton down 7.5%. Naples is down nearly 6%. Realtor.com is projecting Cape Coral will fall another 10% through the end of this year. The only metro in America with a double-digit decline forecast. The Wall Street Journal called it the worst housing market in the country. And honestly, when you look at the numbers, it's hard to argue with that. Let me put this in real dollars so you can feel what this means. If you bought a home in Cape Coral at the peak for $436,000, which a lot of people did, prices rose 75% during the pandemic. That home is now worth roughly $379,000. You've lost $57,000. In Northport, prices are sitting 20% below August 2022 levels. The statewide condo market is down almost 10% in 12 months and 13% from the cycle peak, the steepest annual condo decline since 2009. For sellers, the numbers are brutal. 77% of Florida homes now sell below asking price. Only 8.6% sell above. Median time to go under contract has stretched to 58 days statewide. In Sarasota, it's 95 days, and the foreclosure trend is heading in a direction we haven't seen in a long time. Florida posted the highest foreclosure rate of any state in 2025. Adam Data has documented 12 consecutive months of year-over-year increases. Charlotte County, that's Punta Gorda, has seen a 400% increase in foreclosure filings since early 2024, and now has the highest foreclosure risk of any county in America. A USF economics professor pointed out that this many consecutive months of foreclosure increases hadn't happened since 2008. Now, I want to be honest with you. Foreclosures are still about 87% below the 2010 peak. The mortgage quality today is much better than 2006. We don't have ninja loans. We don't have widespread fraud. So, this is not 2008, but the direction matters, and the underwater mortgage problem is growing. In Lakeland, nearly 11% of mortgaged homes are underwater. In Cape Coral, 27% of recent buyers owe more than their home is worth. Florida homeowners lost an average of $37,400 in equity last year, the biggest drop of any state. Now, look, I know a lot of you watching are in Florida, or thinking about Florida, and this video is about to get into 3 forces that are going to push this market even lower. If you don't want to miss the next update, because this situation is changing fast, hit that notification bell right now so YouTube actually shows you our videos instead of burying them. All right, let's keep going. Remember I said America's 2 biggest home builders revealed something about Florida on their earnings calls? Here's what happened. LAR, the second largest home builder in the country, headquartered in Miami, reported Q4 2025 numbers in December. Net earnings collapsed 55% year over year. 55% gross margin on home sales dropped to 17%, down from 22% a year earlier, a 500 basis point decline. For the current quarter, they guided their average selling price down to $365,000 to $375,000, which represents an 8 to 10% price cut from last year. Their executive chairman said the overall market remained challenged even as rates moved slightly lower. Dr. Horton, the largest home builder in America, net income dropped 30%. They're sitting on 20,000 unsold homes. Their chairman acknowledged that affordability constraints and cautious consumer sentiment continues to impact demand, and said incentives will remain elevated through all of 2026. And the incentives are staggering. Lennar is offering 51 ARMs at 3.75% in Central Florida and $30,000 to $40,000 off in some communities. Dr. Horton is advertising 99% introductory rates. LGI Homes is slashing $50,000 off move-in-ready Orlando homes. Beazer is running $50,000 spend-your-way promotions. 2/3 of all builders nationally are now doing rate-buy-owns, creating an effective new construction mortgage rate of about 5.27%, while existing home sellers are stuck at 6+. Think about what that means if you're trying to sell your home in Florida right now. You're not just competing against the house down the street. You're competing against billion-dollar companies that are willing to lose margin and subsidize mortgage rates just to keep moving inventory. The NENAHB Builder Confidence Index stayed below 50, which is the break-even line every single month of 2025. In the South, the reading was 36 in December. 37% of builders cut prices in March 2026. Building permits in Lee County, that's Cape Coral, plunged almost 28% in December alone. The builders see what's coming. They're not building into strength. They're liquidating into weakness. All right, now let's get to the insurance situation. This one is flying under the radar, but it's doing enormous structural damage, especially in the condo market. Florida homeowners insurance averages between $7,100 and $8,300 a year. The national average is $2,500. That's 181% more than the rest of the country. Premiums have risen nearly 70% in 5 years. Now, there is some stabilization happening. Citizens' property insurance has shrunk from 1.4 million policies at its peak to about 395,000 today. 17 new insurance companies have entered the market, and Citizens just approved its first rate decrease since 2015. So, that's moving in the right direction. But the condo market, that's where this has gotten devastating. After the Surfside collapse, Florida passed a law requiring structural inspections and reserve studies for buildings 3 stories and above. As of January 1st, 2026, associations can no longer waive or reduce reserves for structural components. 40% of Florida condo owners have faced special assessments in the last 3 years, and some of these assessments are absolutely crushing. One building in North Miami hit owners for up to $134,000 per unit. A building in Aventura assessed owners up to $400,000 per unit. Monthly HOA fees in Miami high-rises jumped nearly $500 a month in 2025, with some buildings now charging over $2,000 a month total. And here's the part that makes certain condos literally unsellable. Over 5,000 properties now sit on Fannie Mae's mortgage blacklist because they haven't met these requirements. That means no conventional financing. Cash buyers only. Think about what that does to your buyer pool overnight. Condo inventory statewide has swelled to over 13 months of supply. Listings surged 37% in a single year. 43% of condo sellers have cut their asking price. Half of the top 10 U.S. metros with the most unsold condo inventory are in Florida. If you own a condo in a building that hasn't completed its structural reserves, you're sitting on a rapidly depreciating asset with a shrinking pool of potential buyers. That is the reality right now. I know that's a lot of data, but this is the stuff that nobody else is connecting for you in one place. Migration, prices, builders, insurance, foreclosures, they're all linked. And understanding how they fit together is the difference between making a smart move and making an expensive mistake. If you're finding this useful, just tap that bell. Cost you nothing. Make sure you don't miss the next one, because this last section, what the big Wall Street landlords are doing right now, might be the most important part of this entire video. Okay, this is the one I've been building toward, because what the institutional investors are doing right now might tell you more about where this market is headed than anything else in this video. Redfin published their Q4 2025 investor report in early March. Investor home purchases in Orlando dropped 16% year-over-year, the biggest decline of any U.S. metro. Fort Lauderdale fell 15%, Jacksonville dropped 7%. And nationally, 9.2% of homes sold by investors in December sold at a loss, up from 7.1% a year earlier. These are sophisticated operators with data teams and analysts, and they're taking losses to get out. But here's the bigger story. CNBC and Parcel Labs reported in March that the largest institutional landlords in the country, Invitation Homes, Progress Residential, American Homes for Rent, First Key Homes, have been net sellers for at least 6 consecutive quarters. Not 6 months, 6 quarters. They've been selling more homes than they buy for a year and a half straight. First Key is the most aggressive. Over 1,000 active listings, cutting prices an average of 10% off original ask, reducing every 20 days. Miami and Tampa rank among the top markets for these institutional fire sales, with some operators selling 4 homes for everyone they buy. Invitation Homes owns about 24,000 homes in Florida, 32% of their total revenue. And they reported Florida's same-store operating income declined in Q4, while new lease rates fell 4.1%. American Homes for Rent said new lease growth turned negative in January. The co-founder of Parcel Labs put it simply, rents aren't holding up relative to what investors can get if they sell. So, the better risk-adjusted move is to just take the cash and walk away. And here's what we need you to understand about why this matters so much. When these institutional players dump thousands of homes onto a market that already has record inventory, that already has builders slashing prices $50,000 to $60,000, that already has condos sitting unsold for 13 months, it creates a compounding effect. Every new listing puts downward pressure on the ones already sitting there. Sellers start undercutting each other. Appraisals start coming in lower. Buyers see the trend and wait. And the whole thing feeds on itself. So, let me bring this together and tell you what I think this means. Depending on where you sit, if you're a homeowner who bought before 2021 and you're staying put, you're probably fine. You've got equity. Just make sure you understand your insurance costs. And if you're in a condo, make sure your building's reserves are funded. That's the biggest risk for existing owners right now. Not the market itself, but the carrying costs. If you're a seller, especially on the Gulf Coast or in the condo market, you need to get realistic on pricing right now. 77% of homes sell below asking. Every month you sit, the comparable sales around you get lower, and you're now competing against builders offering subsidized rates you can't match. If your home has been listed 60 to 90 days, you're likely overpriced for where this market actually is. If you're a buyer, your moment is approaching, but we don't think we're at the bottom yet. The data points toward further declines through 2026, particularly in Cape Coral, Punta Orta, Sarasota, and Naples. If you want to buy now, new construction with builder incentives is arguably the best value in Florida real estate right now. You're getting effective mortgage rates in the high 3s to low 5s that no resale listing can compete with. And if you're an investor thinking about Florida rental properties, the institutional players have entire research departments, and they've decided that selling is a better move than holding. When Invitation Homes is liquidating Florida inventory at a ratio of 4 sales for every 1 purchase, that's a signal worth respecting. Here's the bottom line. Florida's housing correction is not a prediction anymore. It's in the migration data. It's in the builder earnings. It's in the foreclosure filings. And the 3 forces I showed you today, insurance making condos unsellable, builders slashing prices to survive, and Wall Street landlords heading for the exits. Those 3 forces are going to keep pushing prices lower through 2026. I'm tracking every data release, every earnings call, every census update, and breaking it down for you so you can make the smartest move possible with your money. If you want to stay ahead of this and not find out 6 months from now that your neighborhood dropped another 10% while you weren't paying attention, hit the notification bell. We're not asking you to buy anything. We're just asking you to stay informed. We'll see you in the next one.